joining in with that perspective. Now, Jay Bala of cashthechaos.com is now joining us to take some questions. And I think Jay is suitably placed to, I guess, comment on the flash at the bottom of the screen, which is the fact that, euro is now, €1 is $1. Any thoughts on this one in terms of impact? What this would mean? Last time this has happened, I mean, any thoughts at all?
Yeah. Hi, Prashant. Thanks for having me on the show. I've been trading full time since 2001, and ever since that time, it has been said that dollar will become toilet paper. But hold your breath. We are at the levels where the dollar index was 20 years ago. So, from the point of view of technicals, we have always been bullish on the dollar, and from a medium-term perspective, the medium to long-term perspective for the euro is somewhere about 0.8. And that's not going to happen immediately. We're going to see an extreme short-term bounce. The dollar index, I anticipated to hold below 109 and see a short-term relief rally. But, as I've been saying, the medium-term, we have to contend with much higher levels for the dollar index. If you want to, it's probably academic for most people. If you look at the long term for the dollar index, we're looking at something like 138. That's somewhere like 2025-26. But from a short to medium term, if 109 were to get taken out, we are looking at much stronger dollar index even in the medium term. If you recall my conversation with you and Lata on Jan 8, 2021, I turned bullish on the dollar at about when it had bottomed on Jan 6th. And it's been, even exceeding my price projections. I had initiated about 98 and then 100, 101, 106, and it's going on. This is a very powerful rally, and we're going to see a continuation of that.
Jay, we have trouble remembering what happened 3 months back. Going back to Jan 2021, you got a strong memory. Unfortunately, perhaps some of us don't. But, looking at the index, Nifty and the Bank Nifty, Jay, how are you approaching them? Because, we've had a fairly decent sort of counter-trend rally. I mean, is it a counter-trend rally to begin with, Jay? Your view and, how are you approaching the two big indices?
Indeed, Anuj. That's how I'm seeing the market, and I've been saying that in advance too, that we're going to see a counter-trend rally for the markets. The markets on the Nifty as well as the Bank Nifty have satisfied the minimum counter-trend projections that I had made. 16,300 was the level I was anticipating for the Nifty, and 35,500 for the banking index. It's done that, but if you look at the decline that's happened from yesterday's high, so far it doesn't look like start of the next leg down. Now, I would want the market to do some more up move, but if the markets were to accelerate lower from here, then I'd be more worried that the next leg down has already started. But I would say that this bounce so far, is not satisfactorily high enough for the market to reset the bearish sentiment. The bearish sentiment needs to go a little more neutral, and then the markets to start the next leg down. So, even this is the same case for the S&P futures too. But, there are a couple of problems, as I look at the NASDAQ futures now, it's starting to look like a start of a next downtrend. And the FANG index, which has been pretty important for me always, that's starting to look weaker than I had anticipated. So these are the two problem pocket. And one more point for the Nifty is that I had a time pivot for the Saturday. So when the time pivot falls on a Saturday, the next trading day is important. And the fact that the markets are coming off from 16,275 on a Monday, one day next to the time pivot, is making me a little bit uncomfortable. But I would still insist that this counter-trend bounce is not enough. It needs to go a little more higher.
Okay, all right. Hi, Jay. What about the IT index? That's the underperform. I'm just going to ask my director to pull up a last 6-month chart of the Nifty, which is down 7-8%, but the IT index has corrected close to 30%. We're at around the 27,100. Where do we go from here, Jay? Go ahead.
Yeah. Last time I had outlined that 27,100 on the Nifty IT index. That was pretty important. The markets are tantalizing close to breaching that. And that is, that's not a good sign. That is, despite today's weakness on Infosys, it's slightly, relatively outperforming in TCS and HCL Tech, even including Wipro. But if the IT index were to go below the June 17th low, I don't think there's too much of downsides from there. but we want to let the market turn up, and then we start deciding to invest or not. But as things stand, I think Nifty IT doesn't have too much downside below the June 17th low.
Okay, Jay, which are the juiciest trades that you are seeing out there? I mean, it could be a sectoral view, it could be specific stocks, but are you seeing those kind of trades?
Yeah, see, this is the thing. The market hasn't, risen enough for shorts to, put in a comfortable, risk-reward trade. There is a little bit of problem. But HDFC Bank, from the merger highs in April, it's come down in a trending fashion, and it's bounced in a counter-trend fashion. And HDFC Bank may have the extreme short-term slight higher high, or it's already completed a high. So there is a short potential there on HDFC Bank, as long as it stays below 1440. And since I have been highlighting that the counter-trend bounce is not enough, it's very prudent to keep your risks quite low, and think of trading not too much, and participate this on this potential down move via puts. So I think if the stock is turning down, it will probably go below the June low of 1280. So, and again, when it comes to another stock in the FMCG space, Berger Paints has been an underperformer. I think that's looking like a stronger shorting candidate than HDFC Bank. So 606 is an important level. I think it's going to stay below that, and it's likely to go down to 520 if my thesis is correct. Again, participate in these using puts. Don't leverage too much. Because these are not coming off the perfect ideal conditions. And if you look at on the long side, I like the stock Ambika Cotton. If you look at cotton futures, it's come down about 45% from the recent highs. And the stock, individual stock assets, has completed a medium-term correction at 1325. As long as the stock stays about 1200, this got a medium-term potential of 1300. And once again, we are in the broad downtrend. So, and this is a stock that's trying to swim against the tide. So allocate sensibly, keep somewhere close to 10 to 20% and not beyond that.
Okay, Ambika Cotton, based out of Coimbatore. Jay, what about the big boy Reliance? Because there was a bit of a body blow from the government 2 or 3 weeks back in terms of the windfall gains tax. And since then, the stocks are holding the recent lows, but at higher levels, it's seeing selling as well. Any thoughts here?
Yeah, Reliance is pretty vital for the whole market. Anuj, it needs to take out 2640. If it were to hold below 2640, that may not be a sign of health. I had tweeted sometime last month using the Nifty infrastructure index and pointing out Reliance and Bharti being key components of those of that index. And I had pointed out a potential for Reliance to drop somewhere close to 2350. It's come there. Now, if it were to go lower from here or meander below 2640, that's not a good sign. I don't want the market to do that. I would want Reliance to take out 2640. That will be bullish for the market. But there are signs of underperformance for Reliance from a medium term. I want the market to prove me wrong, but I was anticipating Reliance would underperform and IT would compensate for that. But even IT is behaving in a weaker fashion. So, very, very watchful of Reliance 2640.
Okay, Jay, before we wind up, let's talk about another asset class. What about gold? That as well has been doing a little slippy slide. I think it's down. It's a 9-month low, if I'm not mistaken, on that index. Where is it headed from here?
Yeah, I think precious metals as a sector, likely to turn when the dollar index peaks. So, that's most likely to be concurrent with the dollar index peak. So gold has got a very strong support around 1700 mark, 1705, 1710 is a very strong support. And if that were to go, we are looking something close to 1650. And likewise, silver is got a very strong support about 1840. But I'm waiting to pull the trigger on both these precious metals. I think a short-term bounce that's tradable and profitable is likely. And once the dollar index turns from somewhere around 109, I expect at least a huge relief rally to come through for both these precious metals.
You know, gold is one of those things, right? I mean, it was a meme actually, but it made perfect sense. I mean, it's almost as if gold